Hello and welcome. Today we shall be taking a look at soft drinks company Britvic PLC. The company has a market capital of £2.3 billion and is currently ranked 54th in the UK FTSE 250 index. In the financial year to September 2018, Britvic had a turnover of £1.5 billion and an operating profit before tax of £145.8 million, which gave it a margin of 9.7%. The company currently pays an annual dividend yield of 3.4%, which is paid semi-annually in February and July. This dividend is currently covered twice by the earnings per share. The company dates back to 1845 in Chelmsford as the British Vitamin Products Company. The company floated in December 2005 at a price of 230 pence per share. Simon Litherland joined Britvic in September 2011, initially as Managing Director of Britvic GB, and was appointed Chief Executive Officer in February 2013. Prior to Britvic, he worked 20 years for global drinks manufacturer Diageo PLC. Britvic is the UK's second biggest soft drink manufacturer, employing over 4,700 people worldwide. With most of its operations in the United Kingdom and Ireland, the company now exports to over 50 countries. Brands include Robinsons, Britvic 55, Tango and J2O. The company dates back to 1845. It created vitamin-infused drinks in the 1930s and owned brand mixers in the early 1970s. Tango and R. White's was acquired in the 1980s, and then Robinsons from Reckitt and Coleman in 1995. Britvic holds the exclusive rights to make and market PepsiCo's global brands in the UK. In 2018, the revenue was divided between Great Britain 59.3%, France 17.9%, Brazil 8%, Ireland 11.6% and other international countries 3.3%. For the previous 5 years, Britvic has had a consistent revenue of between £1.3 billion and £1.5 billion and an operating profit margin ranging from 8.9% to 10.6%, which gave it an average of 9.9%. The forecast for next year is a revenue of around £1.5 billion and a margin of 11.6%. With generated earnings for the previous 5 years of between 41.8 pence and 56.3 pence per share, the dividend has always been well covered by at least 2 times the earnings per share. The share price standard deviation for 2018 was 55, compared to 1,057 for the FTSE 250 index. The current share price is 95.4% above the 52-week intraday low. In December 2017, Britvic proposed closure of the Norwich plant. There followed a threat of strike action for improved redundancy payments. The Carrow Works plant, which it owns with Unilever, is due to close later this year at a cost of between £35 and £40 million and a loss of over 240 jobs. In early April, the soft drinks industry levy was introduced. 94% of Britvic-owned brands already fall below the set level of 5 grams per 100 millilitre of added sugar. In April, its major distributor, Conviviality, officially went into administration. There was a disruption to manufacturing due to the industry-wide temporary shortage of carbon dioxide in Great Britain and Ireland during a summer of prolonged hot weather. In July, Britvic reported third quarter revenue of £366.9 million, an increase of 3.4%. In October, its Chief Financial Officer, Matthew Dunn, resigned to take up the same role at online fashion retailer ASOS. Final results announced in November, pre-tax profit rose 5.1% to £145.8 million, adjusted earnings per share increased 6.4% to 56.3 pence, and the final dividend was lifted 5.2% to 20.3 pence per share. The interim financial results will be announced the 22nd of May. Britvic is regarded as a defensive stock and with the recent market volatility, the share price has risen. This is reflected in the share price being close to the 52-week intraday high. However, the PER at 14.7 is the same as the FTSE 250 average of 14.9. The dividend yield is 3.4%, is also the same as the FTSE 250 average of 3.39, and it is covered twice by earnings. In 2011, it purchased Fruity Enterprises of France, and in 2015, Brazil's EBA, which provides regions of further growth as the population growth and increasing personal wealth levels should drive soft drinks demand in the years ahead. As well as the low and no sugar products Britvic offers, latest research is showing a rise in 16 to 24-year-olds who are not drinking alcohol. Britvic products should benefit from this trend towards a healthier living. Adjusted free cash flow was £65 million and adjusted net debt was £575.5 million. Net pension surplus was £86.9 million. For these reasons, I've given Britvic an overall rating of 3.7 out of 5. Thank you for watching. Please leave comments below. And also like and subscribe for further analysis of UK company businesses.